I want to go to the French and transitoire. How transitoire is our inflation as we move forward?
Thank you. It's really nice to catch up with you again. Thanks a lot. So, transitoire means three things in English, if you allow me. The first one is we have a lot of supply bottlenecks that is due to the fact that the world is not being vaccinated enough. So if we vaccine, that should go away. Transitoire also means that we have a surge in demand. As you know, we had a lot of fiscal support, and that's, we've passed the peak, and that means it will also fade away. Now, what we need is some more clarity about how policymakers are going to deal with inflation expectation. But so far, that's what transitoire is, well into the beginning of 2022.
I look, Laurence, at the report, and it is a report of optimism. We see market economists tweaking here and tweaking there. What is the element of economic growth that is most mysterious for 2022?
There are a couple of things that are very mysterious for 2022, and more than that, actually, in economics. There's a lot of uncertainty, as you know, out there. One, again, is the vaccination. As long as we won't have vaccinated the planet, the risk of a variant that's nastier is possible, and that would pull us back into 2020. With all restrictions on economic activity. Another huge source of uncertainty is obviously inflation expectation, and we'll need both central banker and fiscal policymaker to give clear trajectory on their tools, on the budget, on monetary policy, to make sure that those inflation expectations we were discussing actually remain anchored. And that's at least two uncertainties. I'm sure you've got many other.
We've got a ton, so let's weigh in on a few more. But let's start with inflation and just build on your forecast. So you've hiked 21-22 inflation forecast, the outlook for the US, the Eurozone and the UK. Can you run me through the policy prescription you offer alongside that? You were talking there a little bit about guidance, Laurence. I want to understand the policy stance that you'd like to see from central banks together with that story, with the inflation outlook.
So thank you. I think these are two very interesting questions, actually. In the short term, for advanced economies, and the one you mentioned, it's pretty clear we're not back on track yet, not fully, right? So we still need those policies, monetary and fiscal, to be accommodative. But we know that, we're getting closer to the trend we had before COVID crisis, so these policies will have to evolve. And there's no one size fits all, but what we need is at least two things. First, indication on the sequencing, and second, indication on the conditions, the economic variables, the evolution that will make those policymakers move. And the last thing is, fiscal policy, super accommodative, will not last forever. We have climate to address. This will require resources. So governments need to plan now on how they will adjust in the future, in a year or so, for addressing those challenges.
Let's talk about China. Laurence, I'll be blunt. What on earth is going on in China right now?
So the Chinese authorities, as you know, for a while have been trying to rein in the loans that support the real estate sector. And we've always been their excesses. We've always been they need to be reined in. It's rarely a very smooth ride when regulators are trying to adjust some of this excess credit. That's one thing. The really important things that you want to look at is what's the possible contagion effect on the rest of the world economy, right? And for this, I think, notwithstanding the fact that it's very early to be able to assess that, when we look at this in the past, on the real economy side, you need a prolonged shock in China to have an impact on the rest of the world. And on the financial side, there's still too few connections between China and the rest of the world to make us overly worried, but it's obviously a risk that we are monitoring.
But China obviously could have an outsized impact on emerging markets specifically, even if not so for developed markets like the U.S. Does what's happening there risk exacerbating the inequality of growth that you reference in this outlook?
Well, this is right. I think a number of emerging markets are very sensitive to China. Just look at commodities, right? I mean, there's a lot of commodities that are being exported to China. And you can name a few of them, especially in Latin America, for example. So yes, a prolonged slump, which would have downward impact on those exports of commodities, would definitely harm them. And we do say in our projections that some of the emerging market economies are more fragile than others.
Obviously, part of what is happening in China as well is an effort toward decarbonization, and that is leading to lower steel production, for example. And we have the UN meeting here in New York this week with climate-related issues really front and center on the agenda. And I'm wondering how you factor that into your growth and inflation expectations when you think about some of that decarbonization effort.
So I think you've pointed the finger on what's the next biggest challenge, and one of the reasons why we are insisting that fiscal policy must, enter into some kind of guidance, like what monetary policy has been doing for now more than a decade, is also because of the cost of the climate transition. I think we should be true to ourselves. This is going to be costly, and it's going to be costly for public finances, and we will also have to look at the impact on inflation. Take, for example, Spain. A huge chunk of the upward revision we've made is because of electricity prices. But what's important to note is it's a shift in the price level. It's not a permanent shift in inflation. And that, I think, is the message we were also trying to send this morning with our update.